Welcome back, friends. Stock futures in the United States are currently dropping as the selling pressure is intensifying on Wall Street, which was already there, but there is more pressure as we get ready to open trading on Wall Street in just about an half an hour's time. The futures tied to the Dow Jones have slipped almost 500 points or 1.1%. The S&P 500 futures down 1.4%, while the Nasdaq 100 futures have dropped 1.7% at this point of time. Last week, S&P 500 lost 3.1% for its worst weekly mark since September. The Dow fell 2.4%, while the Nasdaq fell 3.5%. The struggle comes as the market was whipsawed by developments out of Washington, D.C., with negotiations on tariffs between the United States, Mexico, and Canada playing out pretty much the whole of last week. In an interview that aired on Sunday, President Donald Trump responded to a question on Fox News about the possibility of a recession by saying that the economy was going through a period of transition. And yes, transition indeed it seems to be. The risk of the bear case have risen. There has also been a rotation out of money out of the US stocks into the European stocks, and out of stocks like red hot markets like India into Chinese markets. Particularly, you have seen Hang Seng perform very well, even as you saw DeepSeek coming on the forefront. You saw Hang Seng beginning to outperform other emerging markets. Now, the political turbulence that we have seen last week may continue this week as well. Canada is about to have a new prime minister in place of Justin Trudeau. So you have Mark Carney coming in a few weeks' time. And there is also a very heavy dose of economic data which is coming out of the United States. You have the PPI, the Producer Price Index, the Consumer Price Index, CPI, and all of that will also have an impact on Wall Street in terms of inflation expectations and what the US Federal Reserve can do as we go forward. The New York Fed survey of consumer expectations is due today. And it will pair with the University of Michigan Consumer Sentiment reading on Friday, which I think is a very, very important indicator of what the US consumer is thinking, how resilient he is. As I explained, the inflation data will also dominate the economic calendar this week. The total and the core consumer price indices, the CPI, likely rose at a more moderate pace in February after sharp increases in the prior month, resulting in annual increases holding roughly steady about the same benchmark. Pushed higher by tariffs and tariff threats, producer prices probably rose faster than the consumer prices for a second month running, keeping the annual PPI levels elevated. Yet, I would not say that the risks of a recession have increased. As of now, the US consumer remains resilient. In the backdrop of the futures falling today and the risk of recession increasing, yet I would hasten to add that the US consumer is still reasonably resilient, is able to go and spend money meaningfully, and things can change in some time, as soon as in a few days and weeks. To get to know more for the US markets, do join our Prime or Prime Plus Telegram groups, which are specifically addressed for the US markets. For the Indian markets, you can join Premium Value, which gives you 1 week predictions in advance. And for both, you can WhatsApp us on 982-086-1044. We'll tell you where the world goes from here, particularly the world stock markets. Happy investing. And I believe that although the futures in the United States are sharply lower, but as we enter the post-lunch session after about 12:15, some recovery looks to be possible, unless there are some further volatile words which come out of Mr. Trump and his team. Happy investing. God bless you.